Good evening. My name is Natalie Westfall, Vice President of Henry Schein Financial Services. On behalf of our entire team at Henry Schein, thank you for tuning into tonight's webinar. I'm once again joined by Bob Gray, CPA. Bob is a member of Gray-Pilgrim and Associates, LLC, and a founding member of the Academy of Dental CPAs. Bob has been a valuable resource to our customers, and tonight we'll provide an update on round 2 of the Paycheck Protection Program, as well as take a deeper dive into the coordination of tax credits and forgiveness on PPP1 and PPP2 loans. We will conclude the session with live Q&A. If you have any questions that you would like us to cover during this session, please use the Q&A window to send them to us, and we will address as many questions as possible in our allotted time. Without further delay, I will turn it over to Bob. Good evening, Bob. Good to see you again.
Hey, thank you, Natalie. So welcome back to anybody who was here in January and saw the first in the series. We're doing this again because there were a number of questions. There's been a number of updates. There's been some actual changes in the program since we talked last. So I'm anxious to try to dive in and maybe help you all understand a little better in a deeper dive exactly how all these tax credits might work and what the PPP loans really can do now. So I must start with a little disclosure and, of course, say we're not really giving you tax advice. You must talk to your own personal advisor. This is for information only. I'm actually glad to say there appears to be a light at the end of the tunnel. I mean, the world was closed here for a long time, but it looks like with 3 vaccines, we might actually be back to a real world. That will be really, really nice. I'm sure you're all waiting for that as well. I am Bob Gray. I'm one of the founding members of the Academy of Dental CPAs. I'm very proud of that. I'm also an instructor, for the ADCPA's Business of Dentistry, for the Schein Dental Business Institute, and I do a lot of lecturing around the U.S., at least before the pandemic. So you may have seen me before. But I'm also a wine nut, as you know from the last thing, and my wife and I love searching around Napa for those 100-point wines. If you're looking for a great Cabernet, try Bevan Cellars. There's my little hint for the night. And again, I'm a horsepower junkie. That's, a 900 horsepower Cadillac. So, all accountants aren't quite the same. A quick shout out to the ADCPA. I don't know if you haven't heard of them before, it's a great group of accountants. Go to adcpa.org if you need to find someone near you. They're all across the United States. So you can find one near you. You'll see on the map there, and if you go to the adcpa.org, you'll find an accountant near you. And I always say, if your current accountant can't point to tooth number 8 or doesn't know mesial from distal, you probably should consider switching, because specialists are really there to help you as a dental practitioner. Let me get right into the program here tonight. I want to just do this really quickly. I just want to repeat again, we've had a lot of questions came up about these economic stimulus payments. And those payments of $600 and $1,200, $1,200 back in April and $600 recently, if you didn't get them, you can actually get them now by filing a tax return. And maybe you didn't get them because your prior year's income tax return showed too high of an income, but then it dropped in 2020, and now you're actually below that threshold and you're eligible. So you might find when you file your tax return, you're going to see a thing on here in line 30 that you might wind up with this rebate now retroactively. Because if your 2020 income is low enough that you're under the threshold, you will get it. So again, be sure to be telling your current accountants how much you got of those rebate payments or the stimulus payments. If you got a partial or a whole or whatever it was, make sure you're telling your accountant so that can go on that form, and you might be able to get a bump. You might be able to get more. Another thing, we talked about this last time, but it's really bears talking about again because it was critical that the retroactive change that happened in December 27th was that all of the PPP loan forgiveness that you're eligible for is not taxable income, nor does it reduce the amount of expenses that you can take. And that is really huge because the IRS originally made the announcement back in May that the income from your PPP loan wasn't taxable income, but you couldn't take the expenses, which is the same thing as saying, basically, I'm going to lose that huge tax deduction or treat it as income, whichever you want to call it. Not having it to treat it as income and getting to do the deductions is huge. So when you're preparing your taxes this year, make sure that you're looking at those funds and not paying income taxes on it. Do not get them buried in your P&L. One of the other things was that it also included the EIDL grant is going to be taxed the same way. We'll talk about that in a minute. Here's the real rub, though, and this is one of the things I wanted to update you on. We talked last time about the fact that all states are not conforming to the IRS rules. It'd be so much easier if they did. But several of them do. Many of them don't, though. I pointed out here, Arizona, Idaho, Indiana, Maine, Mississippi, many of these states do not conform. Now, some of the states, I want to point out Virginia as an example, they don't conform, but the legislature just passed a law saying that up to $100,000 of your PPP loan forgiveness could be treated as non-taxable income for Virginia purposes. So you can see how convoluted these rules may be. And so you have to check your state. In California, for instance, they're still lobbying and they're still talking and about what they're going to do about it. And here we are in March, and tax returns need to be filed, and the legislature is still trying to figure out what they want to do. So I would tell you that if you have any questions, if your state is one of those that's up in the air, I think you might want to consider filing an extension, because the only other alternative really is for you to actually pay income taxes on that money and then try to file an amended tax return after the fact to get the money back. Again, I'll let you decide whether you want to file on time, but I would tell you that for most people who are on the fence, filing an extension is a perfectly acceptable way to sort of, hit the brakes and say what happens. You would still have to pay the state tax that's actually estimated to be due. But if you wait to file the return, you would immediately get it refunded with that return or apply it then to 2021 tax. So you wouldn't have to wait for that much lengthier amended return refund process. So again, make sure that you're talking to your accountant about the rules that apply to your state, because it's going to be critical when you're filing this year's return. One of the other things we talked about that was retroactive is the fact that the $10,000 EIDL advance was also going to be treated as completely non-taxable and was not going to reduce the PPP loan forgiveness. In the original rules, if I had a $100,000 PPP loan and a $10,000 EIDL advance, I was only going to be eligible for $90,000 of PPP loan forgiveness. Now, again, retroactively, I can get that money back. And if you actually jumped the gun and applied for loan forgiveness, and in my example, I only got $90,000 forgiven, contact your bank and go back, because retroactively now you can get that $10,000 forgiven. On a side note, we had a question in the past that someone had asked about HHS funds. Are they taxable? And the answer is yes. For state and federal tax, those HHS grant funds that you probably received aren't treated like this. They're exactly the opposite. They're taxable income and taxable for both state and federal purposes. So make sure those HHS grants are included in your practice income for tax purposes. This is really one of the biggest changes I wanted to talk about tonight. And I don't know, again, it's going to affect a smaller group of people, but for those people, it's going to be a really big deal. President Biden did a presidential order last week, and the SBA just yesterday published this change for PPP loan eligibility for people who file Schedule C, that's sole proprietors. In the past, if a sole proprietor, let's say you just bought a practice, or you had a small practice and you bought some equipment, and so you had some rapid depreciation, and maybe you had a loss on your Schedule C, or maybe a very, very small number of taxable income for 2019. And then came the pandemic. And now it's time for you to go, well, how much am I eligible for? And the answer was zero. So unfortunately, that was bad news then. But what Biden and the new rule states is that you now can use your gross income. And that gross income is an enormous difference. Again, let's say I had $100,000 of gross income on my income tax return and zero net income. Again, originally I was not eligible. Now with $100,000 of gross income, I'd be eligible for $20,833 as a PPP loan. So for those of you who are locked out because you didn't have enough net income on a Schedule C, Stay tuned, because I would tell you the problem is going to be that the banks really aren't ready for this yet. I mean, they just announced it yesterday, but the program's running out. So stay tuned very closely, because on March 31st, unless they extend it, the program's going to run out. So in this short period of time, if this is one of those things that applies to you, make sure you're on top of this and get your application in to your PPP loan provider, and at least get the application in under the wire. This is going to be a critical change, again, for those with small losses or any Schedule C under $100,000 of taxable net income. So again, watch for more news from the SBA on that. Let me go back to the old rules again, talking about PPP1. Under this new program, anybody who did not get a PPP1 loan is eligible to do it again. There were a lot of questions that came up for that. Remember, the PPP1 just said I had to be in business as of February 15th of 2020 to be eligible for this loan, and then it was based on payroll. The PPP2 loans have that eligibility that said I had to drop 25% in revenue in any one quarter in 2020 as compared to 19 to be eligible. But PPP1, that eligibility was just, hey, I just need to be an enterprise operating on February 15th. So if you didn't get one the first time, remember that that's the easier one to get, because there's no eligibility requirements technically, other than, again, I was there. So again, look at that, see if you're eligible for PPP1. Here's the bad news. As of the 21st, when I looked at it this in February, that was the last time they published it, there was already $679 billion of the $796 billion that was appropriated was gone. So as I mentioned in January, we talked about this, it's tick-tock. It is time. If you have not done it yet, make sure you're contacting your bank and get your loan application in, because it is first come, first serve as late as March 31st, or until the money runs out. So the money runs out on March 15th. That's the end of the program under the current rules, unless they extend something. So make sure that if you have not done your PPP1, PPP2 eligibility checks and all those things, make certain that you're doing it now. Again, going back to the rules, you have to have utilized your PPP1 loan in full to be eligible for PPP2. You cannot have more than 300 employees in PPP2. And revenue needs to have decreased at least 25% in one quarter in 2020 as compared to the same quarter in 2019. I've had a couple questions about whether that quarter could be any 3 months. And again, the SBA has not said no. They just keep referring to the word calendar quarter. And so it's got to be April, May, June. You couldn't pick March, April, May. So as of now, that's what a quarter really consists of. The other option is just to say, well, as long as my total income was down 25%, if I looked at my revenue in 2019 and my revenue for all of 2020, if it's down 25%, you could submit that as proof of eligibility as well. So those are the tests you need for the PPP2 loan. Several questions that came up again about the change in ownership. So what if I bought a practice on March 15th of 2020? Well, technically, I wasn't in business on February 15th of 2020. So originally, people thought maybe I'm not eligible for a PPP loan at all. The SBA came back and later clarified that no, you can look back at the actual stats and revenue of your practice you purchased, and then compare that to your practice stats to see, in fact, if you're going to be eligible. So you can look back at the predecessor entity, even though it's not your dollars, to see if you are actually eligible. The question also pops up, but what really counts as payroll costs? So one of the changes that they made retroactively was it's not just salaries, commissions, all the W-2 things that you would normally think of. And in the past, it was also the retirement contributions as well for your staff members, not the 401k part, not the part that came out of their pay, but the part that the company actually paid as an expense to the company. That was always eligible, as well as the state unemployment tax on the compensation of these employees. But what they added on December 27th in that new rule was any other benefits. So if you're paying for group life, disability, vision, dental insurance, all of those things that the company is paying for is eligible for the payroll calculation in that PPP2 loan. So again, if you're just now getting around to filing for all that, make sure that you're using all of those dollars to get the maximum PPP loan that you're eligible for. Most of them are being interested in how do I qualify for forgiveness. We're going to talk tonight about several examples of things. There's going to be, again, I actually hope many of you have not gotten forgiveness on your PPP1 because it's going to be too late to go back and make some of these changes we're going to talk about tonight. But for even those for you that have PPP2 loans, it's going to be important that you ask for forgiveness with the correct dollars for payroll, because we're going to talk about how to integrate that with the employer retention credit. So again, the end of the program tonight, we're going to talk in much more depth about how to make that coordinate. But one of the reasons this is so important is under the new rules, again, after December 27th, they added things that could be included for forgiveness. Remember that 60% of the loan proceeds still have to be spent on payroll, but 40% of the loan proceeds could be spent on other things, which used to just be rent, mortgage interest, and utilities. And now they added a really broad level of expenses, which to me almost covers all other overhead items. As broad as the discussion was and their definitions were, it's very difficult to imagine what might not be deductible, quite honestly. So I think you're going to find that many of you, any of you, would be able to find 40%. And that's going to be helpful because you want to try to preserve as much of the payroll that you pay for use against other credits. The employer sick leave credit, the employer retention credit, the family leave credit. Because the dollars can't be used for the same thing. They can't be used twice. So making sure that you use the least amount of payroll dollars for forgiveness for your PPP loan will maximize the amount that you have left for other credits. That's important. And again, what we're going to cover in even more depth here tonight. When they talk about these new eligible costs, it was, again, as I said, a very broad thing. One of the things they said, and I'm reading here, expenditures to suppliers that are essential at the time of the purchase. So how many things did you buy for your practice that weren't essential? You wouldn't have purchased them if they weren't essential. You needed them to operate the practice, right? And so I think if your definition as they were essential, it's pretty much everything that you paid for. So again, that's why I say it's such a broad category that I really believe that you can find that 40%. And make sure you're using those kinds of expenses, not payroll, for that loan forgiveness application. So that's going to be the important part. I want to reiterate again that they have a new simplified form for any loans under $150,000. The SBA did just publish a new form, again, about a month ago, but it was new because after the December 27th rules came out. The critical part of that is that it's very short, 1 page in length. And if you remember, when we were talking about PPP loans back in April and May, you had to actually have your full-time equivalent staff reinstated during that forgiveness period or no later than the 31st of December. There was a lot of emphasis on, did I have to hire even the same people? Did I have to bring the exact same people back? Or if I had 5 FTE employees, could I at least bring 5 new people or 5 different people back? A lot of confusion about that. And they took all of that away. All of that test on FTEs left for loans under 150,000. The SBA realized it was just like, look, we want to put the money back in the hands of the businesses. We don't care which people they give it to. It'd be nice if they gave it to the same people, but maybe they weren't willing to come back. Maybe they weren't available to come back. So we're not going to penalize people who had family members who couldn't, were sick, or maybe an employee couldn't come back. So now they actually have just taken that completely off the table. Now, again, you will only be using payroll up to 60% and those other expenses up to 40% in order to qualify for forgiveness. So again, make sure that you're not worried about whether the FTEs were maintained during that time period. All you're really basically doing on this application is saying, I swear that I spent the money the way you told me I was supposed to spend it. Now, you have to keep the records. You're required to keep all the records, but you don't actually turn them in with this new simplified application. They're not going to require payroll records. They're not going to require copies of rent. At one point, they were going to ask for lease copies and all kinds of things to justify your lease payments. All that's off the table now. It's just that if the SBA does ask, you have to be able to provide them. So keep a separate folder with any expenses, copies of invoices, whatever you're doing in order to justify those things. Keep copies of canceled checks or check registers. Because again, if you were an audit, you randomly picked for an audit for the SBA, you'd want to have that available. But again, in the easy part of the process is you don't have to supply any of that in order to get the loan forgiveness application to the bank. That's a good thing. So what do you do now? I say that make sure that you're going back to look at 2019 and 2020. Look at each of the quarters' revenue. And it's critical that you find one of those quarters that's 25% down as compared to a quarter the year before. That's what makes you eligible for this PPP2 loan. You have to determine first if you actually need the money. There still is an attestation that you said, I really certify in good faith that I kind of needed the money. The only thing is that the Treasury Department, as I said last time, came out with a statement that said, well, you're automatically assumed to need the money as long as you're applying for less than $2 million. And I think that probably applies to the vast majority of the people who are listening here. So it's an automatic forgiveness, so to speak. You're assumed to need the money. So I wouldn't worry too much about that certification. For most of you, it's automatic. But I still think that if you want to participate, it's, again, act quickly. Let me switch gears and talk about the EIDL grants, the EIDL advances, they were called. It was $1,000 up to $10,000 max, $1,000 per employee. The funds were exhausted, however, and what happened, though, when they first announced this new program back in, again, December 27th, they said, hey, if you didn't get your EIDL advance, now you go back and apply because you can get it again. And so even in a prior seminar, we talked about, hey, go back and apply and do whatever. Well, afterwards, unfortunately, what the SBA did was said, well, fine, you earmark that money, but we're going to change the rules. We're going to only make those $10,000 grants available if you didn't get the first round, only available to people in low income and targeted communities. And then maybe if we have funds left, we're going to let other people come back who didn't get a round one and ask for the round one now. And so, again, it was a little confusing because the SBA decided to make their own rules, as they have in the past. But they've talked about the economic low-income communities and how to find them on the map. And later on, when they came back and said, listen, the SBA now is just going to let you know if you're eligible to apply. If you look at your screen, you're going to see a copy of an email that was actually received by a client. I took the application number off and blanked out the name, but it basically said, listen, there's a new program here called the Targeted EIDL Advance, and we think you are potentially eligible because you're in a low-income community. And if you want to, here's an invitation to apply for the EIDL grant or the EIDL Advance. Now, again, you'd have to apply for that, but this is a copy of the kind of invitation that was sent out. So I think that if you get something like this in the mail, you'd want to apply. Let's switch gears and talk about the paid sick and family leave tax credit. Again, a lot of questions came up about this. Originally, if you had a PPP loan, you were not eligible for this credit. And so what happened was when they made it retroactive, all the people who had ignored this throughout all of 2020 are now saying, oh, well, gosh, what do I need to do to apply for this? So let me talk about this again. If an employee that you had was subject to a quarantine order, advised to self-quarantine, or was experiencing COVID symptoms, and you sent them home or they had to stay home and they were paid, you paid them because they had sick leave, because you were compassionate, because they took vacation pay, whatever it was. If you paid them during that time period, you could receive 100% of the money back, up to $511 per day, by filing amended 941 tax forms. Now, again, you really got to go back and look at 2020 and say, did I have anybody who was out because they were sick, in essence? And if so, let's pull up the dates and let's talk about when we paid them. Because we don't want to use those payroll dollars for PPP loan forgiveness. We want to use them to get 100% of the money back. The second alternative under the sick leave program is if I was caring for somebody at home who was subject to quarantine, I was caring for a child whose school was closed because of COVID, or I was caring for a child because childcare providers were unavailable because of the pandemic. So I couldn't come to work because I was locked at home, basically. I can get 2/3 of my regular pay, up to $200 per day, for 80 hours of sick leave. And that's up to $2,000 for those 10 days. Again, just caring for someone at home, you would also be eligible to file for refunds for that money. That is the sick leave. So either I was sick, the employee themselves were sick, and that, again, was up to $511 a day, or I had a spouse or a family member that I was caring for, any of the other three criteria in there. That's up to 2/3 of my regular pay, up to $200 a day. Again, those are the sick leave credits. There's a separate family leave credit that would extend it for an additional 10 weeks. So if you're talking about 2/3 of your pay, up to $200. So you have to look at this and say, well, gosh, again, now I continue to pay someone. They were a valuable employee. They still have more sick pay or vacation pay coming. I continue to pay them while they were stuck at home. Under these circumstances, you could still apply and get a refund on your employer tax credits, and even a refundable credit, even if you didn't have that much. You can file a form to get the money back. So look back again and look at attendance records and make sure that you've got the documentation as well. You need either a doctor's note, you need an email from an employee, you need a statement from an employee saying that I didn't come to work because I was having COVID symptoms, something like that to document the fact that that was why they were off. But again, you're eligible in that case for up to 100% of the money back you paid them. So look hard at those attendance records and see if, again, that applies to you, because if it does, it's worth filing for these refunds. Even if you were sick, let's say you were the owner of a small practice and you were just saying, well, gosh, I was the one who was out sick. There is a way to get this family and both the sick and family leave on your personal tax return. You turn in the days, and there's two credits here. One is for the top for the sick leave, and the next part was down for the family leave. You enter the number of days that you were out of the practice for the same reason, and you can actually get the credit back on your personal income tax return if you're a sole proprietor or an independent contractor. Maybe you're working for a practice as an independent contractor and you're filing a Schedule C. You can get those dollars back. So if you were sick, make sure that you're documenting that as well. There's some other retroactive changes to the program I wanted to talk about. It's important, again, that this employer retention credit, this is the one we want to spend most of the rest of the time on tonight. This is a really big credit. This is a big deal for a lot of practices. It's important to know that this employer retention credit takes priority over dollars for PPP loan forgiveness. In other words, if I paid an employee and they were eligible during this time period for the employer retention credit, those dollars automatically go first to the ERC, this employer retention credit. They do not have to be used for PPP loan forgiveness. So that could make a really big difference when you're looking at how these two things interact. So make sure, again, I'll repeat it again, make sure you're using as many other expenses for that, up to 40% for that PPP loan forgiveness, so that you're preserving as much of the payroll dollars as you can for this employer retention credit. We're going to talk about some examples and things coming up here in just a minute. To be eligible for this credit, there were two particular tests that had to be met. One was the operation either fully or partially suspended because of a governmental order or related to COVID-19. Now remember, partially suspended. So even if I was going back in and seeing emergency patients, but I was not had a regular schedule, that is partially suspended. So it doesn't mean the doors were locked. It just means you were on some limited capacity for the practice during some period of time. So as long as you were impacted by that, there's been a lot of discussion too of like, hey, if I'm a specialist, but all of my referring doctors were closed and impacted, does that really mean that I was impacted as well? And again, there's a lot of people that would believe, yes, that is, although it's clearly, the SBA has not made statements like that, but you would have a strong argument that you've been certainly partially suspended if your referrals have dried up during that time period. So even if you were there and eligible to see patients, even with a full staff, if you're a specialist, you may, again, in so certain circumstances, apply for this. It's important because this has nothing to do with whether gross revenue was up or down. It has nothing to do whatsoever with it. It only has to do with whether or not you were actually, again, partially suspended. So I think you're going to find that many people could look at this. We're going to talk about, the example coming up here. But the second part of this is whether or not there was a 50% drop in any one quarter during 2020. So the first test, again, was whether or not you were impacted by a governmental order. The second thing is, well, whether your individual revenue was impacted. And I think many of you are going to have an impact of 50% on the second quarter. I know several clients of ours do as well. So as long as that second quarter was a 50% or more drop in revenue, that automatically turned the switch on and you are eligible for this credit. When did the switch turn off? It's the quarter after the one in which you regained and went back to 80% of the revenue you had before. So again, let's say I had 55% loss in Q2 of 2020. And then I came back, but I was still at only 75% in Q3 as compared to 2019. Now that quarter counts. But now in the fourth quarter, I was back to 85%. Well, that quarter counts as well, and into the first quarter of 2021. So you got plenty of time if that happens. As long as you hit that 50% test in the second quarter, where most of us did, you automatically got that quarter and the next one. So you had 6 months of that time period in order to use up. And in the first, I'll call it round one, the 2020 version of this employee retention credit, it's only up to $10,000 in wages per employee that you retained. And it's a 50% credit. So it's pretty easy for many of you in that 6-month window to have burned up that $10,000 towards this employer retention credit. I think you're going to find that many, many people will actually be eligible for this. And so I'm anxious to see, again, when we go back and do a lot of these calculations and look at attendance records, how many people are going to be eligible. Again, it's qualified wages paid from March 13th to June 30, 2021. This program is included for both 2020 and 2021. The 2020 program is 50% of the first $10,000 in wages. In 2021, it's 70% of $10,000 per quarter. So Q1 and Q2, it could be either one of those that you had a 20% drop in revenue. So I could get a $7,000 tax credit for paying an employee $10,000 during a time period in 2021 when my revenue is down over 20%. So again, 2021 is going to be easier to hit. Luckily, I would tell you that the vast majority of the dentists that I've talked to and our clients are back to pretty much full steam. There are very few people that are going to qualify for that 20% drop. That's a good thing. But if you do, there's help on the way, and this help is in the form of this tax credit. So make sure that you're taking advantage of it. Again, it's 50%. That also includes the cost of health insurance, up to $5,000 per credit for the 2020. And as I said, for 2021, it's 70% up to $10,000 a quarter. Now, you file these things on corrected 941 forms and ask for refunds. That's how you get. Here's the big issue that I wanted to talk about also tonight, though. The IRS issued a statement that said this credit reduces the actual taxable deduction for your payroll. So if I have $100,000 in payroll, I got a $10,000 credit, I'm only allowed to take a tax deduction for $90,000 on my federal income tax return. Here's the real problem is the IRS said it has to apply to the year the credit was claimed for. That means, again, if you're applying for these credits and perhaps you already filed your 2020 tax return, you're going to apply for a credit, get the money back, but then have to amend your 2020 tax return to reduce the payroll deduction you took for that amount of that credit. So it's not the full benefit of the dollar for dollar. Again, I would once again encourage people to file extensions. If you think this applies to you and it's going to be complicated and it's a lot more work and a lot messier to file amended returns, consider filing an extension because it's much easier to sort this out when you've had all the payroll credits calculated first and then go back and actually figure out what your P&L is supposed to say. So the IRS made it a lot more complicated than it needed to be. It would have been nice if you could just say, I received the credit this year. I'll take it as a deduction off payroll this year in 2021. But of course, they did not. They made it the hard way. So again, look at that and make sure that if you're on the cusp of filing your return here, you've looked at this to see if you're somebody who should be postponing that decision right now. I want to talk about a couple examples here because this is talking about the magnitude of these dollars. Here's an example where they had a total payroll of $300,000 a year, and I picked a couple employees. Just you may have had an associate dentist, you may have had the dentists themselves, 80, 100, 45, 40, and 35, just a $300,000 total. I picked a random number there, and they were eligible for a PPP loan of $62,500 on May 1st of 2020. Their business continues to have a 20% drop in revenue going forward. But they used nothing. You see that yellow line there. All of the expenses they used for loan forgiveness were strictly payroll dollars. They've already turned in their forgiveness application. And again, they didn't know. And so they used all payroll dollars and nothing for rent, utilities, or other expenses. Even under that particular category, you can see that under the original CARES Act, they're eligible for nothing for this employer credit because they got a PPP loan. Now in the new rule, they got a credit for that time period. And if you see the following, they do the calculation there, it's $77,500 that they would get back in credits. $77,500. Again, that's a huge amount of money. And the reason I'm talking so much tonight about balancing and how do I make sure that I've got the least amount used on payroll and the most used on rent, utilities, and other expenses that are eligible, is take that same practice. And now let's look at what happened if the same thing had used 40% of the expenses. You'll see that amount they're eligible for went up to $84,500. And again, that only reason that changed is because they used 40% of the PPP loan dollars for forgiveness for rent, utilities, and other expenses that were considered deductible other than payroll. So this again points out to you, I think, why it's important to make sure that you've got that balancing act. That's so critical to maximizing the benefit under these credits. Let me show you another simple example, but here's just a larger practice. It was one doctor and 7 staff members. Same thing. They did have a 20% drop in revenue through the first 2 quarters of 2021. But look at this credit. It's $120,000. So people thought the PPP loan was a big deal, but I would tell you that this employer retention credit for practices that continue to struggle in 2021 could be a huge game changer in terms of helping get back on your feet and get the cash flow back that would be critical to the practice here. So make certain that you're looking back at this. Remember, the credit was either because I was shut down due to an order, or because I had a 50% drop in revenue in any quarter of 2020, or a 20% drop in revenue in any of the first 2 quarters of 2021. And I would tell you that, again, there's already talk in Congress and now about extending this through the 4th quarter of 2021. So this has been an ever-changing game that we've been playing all along since the pandemic began. But again, at least know for sure that the current rules say that the first 2 quarters apply. So make sure you're watching your revenue and make sure you're on top of whether or not you are eligible in 2021 as well. Let me show you another example here. let's say that you got your PPP loan in May, and I want to talk about how you actually balance all this. And you had 10 employees paid an average of $4,000 a month. That credit would be $20,000. But even though May 1st was when you received your PPP loan, you don't start payroll on May 1st. You would wait until those dollars were burned up, the $40,000 that you needed for the credit of $20,000, and then the PPP dollars would begin for forgiveness. And because you had 24 weeks in order to do that, you still have plenty of time to get PPP loan forgiveness. Again, remember that these employer retention credit takes precedent, and those dollars come first. So that's, again, I want to point that out today. Here's another example I want to talk about. The mandatory stay-at-home order was issued on 3/20. I picked this, I think I looked up Illinois as a state to see when it was. So look back at your state, because the mandatory stay-at-home order or any mandatory shutdowns in your particular state, remember, is one of those key figures. So that even if all you had, let's say you never had a 50% drop in revenue, and your revenue only dropped 40% in Q2, and you got your PPP loan. Here's an example of just 3 simple employees, and only during that time when there was a mandatory shutdown for the practice. And you'll see that going back here, sorry, we got a little messed up. You'll see that it was $8,800 in the employer retention credit. That was $8,800 just for those few weeks when there was a mandatory shutdown. So again, this could be a significant tax credit that you're applying for, and you didn't even have a 50% drop in revenue. Again, this is just because you were closed. And I think everybody listening, for the most part, had a time period when they were closed. And this is just 3 employees in this particular example. Look what happens if you also expanded that and said, well, I did have a 50% drop in revenue, so I got to extend it for a little bit longer. Here's an example, again, of this balancing. There's employees that earned in the first column there, like I'll take the hygienist who had $2,200 of earnings. That was eligible, but because the mandatory shutdown period was started after 3/20, only those first dollars are what I'm going to call the mandatory shutdown period. Now, April 1st, all the way through September 30th, is eligible because of the 50% drop in revenue. So, but at that time period, I only needed $7,800 in this example to maximize my employer retention credit. So the other $32,200 that I paid during that 6-month window was eligible for PPP loan forgiveness. So in this example, because I had that 50% drop in revenue, I was eligible for both a $57,600 forgiveness on my PPP loan and $15,000 in employer retention tax credits. And remember, this is a 3-employee example. So that for your practice, many of you have more than 3 employees, and so this is really going to be critical. Look at the dates on which these mandatory orders were entered and lifted. Look back at the payroll that you actually had during that time period and make sure that you're calculating the eligible payroll because of that mandatory shutdown. That's going to be critical. Again, what to do? You've got to look at your dates. That's an important start. Review your payroll. Go back and look too at any sick pay that you paid. Look back at attendance records and make sure that you can remember who was there when and then why they were gone. What you're going to want to do is then document why it was they were gone. You're going to want to get doctor's notes. You're going to want to get statements from the employees, anything that you can in order to document why it was that it was applicable to COVID. Also, go back and look at your practice revenues. Look at quarter by quarter. Was I down 50%? When was the first quarter that it came back by 80%? So now you can map out on the map what time period for payroll might be eligible for all this. And do your employer retention credit first and do your actual sick pay and family leave credits first and leave the rest for PPP loan forgiveness. Remember that you're only eligible for about 10 weeks of payroll in the application in the amount you're allowed to apply for, but you had 24 weeks to use it. So you got a lot of flexibility in there in between as to when the employer retention credit dollars could be extracted and the other dollars used for PPP loan forgiveness. So make sure that you balance. That's the key point here tonight that I want to talk about. A lot of questions came up about that, and I hope we've really tried to drive home how you do the calculations and what would be important as far as that goes. So let me review again, because I want to leave at least 15 minutes here tonight for questions, I promise, because we had over 100 last time. Make sure you get your stimulus check. We talked about that quickly. Hurry up and apply for PPP2 if you did not. Make sure you're applying retroactively, getting 941 forms filed in order to get those credits back. Apply for the retention credits. Same thing. They can either be applied for with 941s, or if you did not have enough paid in on federal taxes for employees, there's a Form 7200 you can apply to actually apply for a separate refund for that. And again, maximize the use of other expenses other than payroll for this PPP loan forgiveness. That is what I really, really wanted to drive home tonight, and I hope you all got the message. So let me tell you that I want to leave some time here for questions. I see there's quite a few up on the board already. At the last session, I offered to try to answer questions. I will apologize in advance. This time, we're in the middle of tax season. It's going to be really, really tough. I'd like for you to actually send your questions in. We'll try to consolidate those and do like an FAQ, frequently asked questions, and answer as many of those as we can, but it'd be impossible for me to answer individual questions after the program here tonight. But Natalie, maybe we can get started with some of the questions, because I'm sure you have a few.
Yes, absolutely. We have quite a few questions here. The first one I have is, how long does the process take to know if forgiveness has been granted?
The answer is it depends. When we first had a few people that applied early on, I think one person said they got a letter back in a week. We've had a few people that have applied recently, and it's been forever. And I would tell you that the SBA, I think, is just short-staffed. But again, they made the eligibility so broad for forgiveness that it would be pretty unlikely that you're going to be denied. I mean, for any loan under 150,000, basically you sign a form and get forgiveness. And so I don't think the timing may not be as critical or as quick now as it would have been very early on in the program.
The next question I have is, if I've just applied for PPP Round 1, can I also apply for PPP Round 2 funding by March 31st?
Yes, if you hustle up, remember the only requirement was that all the PPP1 loan proceeds had to be used by the time you're funded for the number 2. So you can apply now if again, maybe you're one payroll away from being able to use all the funds that you received, but you could apply for PPP2 as long as those funds will be consumed by the time that next loan is funded.
Okay, great. Next question. I received my first PPP loan. However, I did not account for my salary because I was a sole proprietor. How do I amend this?
Boy, that's a difficult question, because I would tell you that the SBA came back and said that the only things that were automatically could be amended were partnerships. If you're filing form 1065 as a partnership, there was a lot of confusion in the beginning, and they basically excluded partners altogether. And they didn't really mean to do it. It was the way the wording was, but they came back later and said, okay, if you're a partnership, go ahead and refile that, and we'll automatically consider that. Now, what I've heard clients say is on a bank by bank basis, some banks have been able to actually reapply and make technical corrections to the original loan application. But again, I would say it's the minority of the banks that I've talked to, the majority, and especially the larger banks. I know that Citibank was one that refused to. I say refused, but they said that they didn't feel that it was technically correct to be correcting PPP1. So call your banker and give it a shot, but there's no real guarantee that you're going to be successful.
Okay, great. I acquired a practice on September 30th. Can we use the previous owner's 2019 and 2020 Q2 numbers to file for PPP2 to show the 25% drop?
Yeah, so as long as the predecessor was in business on February 15th of 2020, met all the other criterion, and that person did not apply for a PPP loan. So you only get it once, right? So as long as the owner of the practice at that time period did not go back in May or April and apply for PPP1, and I bought the practice in September, then yes, now I can apply for a PPP loan based on their statistics.
Okay, great. Thank you. For self-employed for someone self-employed who's also applied to unemployment, are they still eligible for PPP?
Yes, unemployment luckily did not have any effect on what was considered income for purposes of employment for a self-employed purpose. So yes, just ignore the unemployment income.
Okay. Here's an interesting one. I'm closing on a practice in the next few days. Will I be eligible for PPP?
Well, again, I would say the answer potentially yes, but the predecessor practice had to not apply for a PPP loan. I would say at this point, that's probably pretty unlikely, but it's possible. So yes, as long as the predecessor did not, you can. And if they were eligible, again, if the stats. So what you think of this way, just pretend the practice never changed hands. If you had continuous financial statements and you were still in business, that's the way the SBA is looking at this. So if you qualify, you qualify on the old seller's stats.
Okay, great. And can people who are 1099 employees be eligible as well?
Yes, they were definitely eligible. There are even those people right now have a little more window, a couple more days when they're prioritized. The SBA shut down processing loans for anybody who had employees of more than 20, and are trying to focus on these small Schedule Cs and independent contractors. So for a few more days, you're actually at the top of the pile.
If my first PPP loan was already forgiven, can I go back to reapply again to claim the owner compensation portion that was omitted?
Now, the SBA made it clear that forgiveness ends the deal. That book is now closed. So unfortunately, forgiveness ends that process.
Okay. Switching over to some employee retention credit question here. Can you apply for employee retention credits if you acquired a business after February 2020? And can you get retention credits for employees if we acquired a practice in October of 2020?
Again, if you would base the calculation on the prior stats, but the credit would only be based on your payroll. So again, let's just say that I bought a practice in October of 2020, and the practice that I bought did experience a 50% drop in revenue in the second quarter and did not recover to 80% in the third quarter. So now they're still eligible. I bought them. Now the payroll that I had after October going to the end of the year, because that fourth quarter is still included, I could be eligible for it, yes.
Okay, great.
But none of the payroll prior to the time I bought the practice.
Okay. If employees took unemployment during shutdown, we did not pay them on payroll. How does that impact ERC?
It eliminates ERC because while the unemployment is not considered as part of this, you had to actually pay the employees. There had to be payroll, and it could have been either way. It could have also been just that the employee had some health insurance that you were paying for, right? It didn't have to be actual payroll. There could have been benefits that were ongoing in order to have that considered eligible payroll. But again, it had to be money that you were paying out as the practice, not the unemployment.
My accountant advised me to use nothing but payroll for the first PPP loan. Now what? Can I get an employee retention credit for 2020?
Well, yes, you can potentially. But I would tell you that you've got to go back and look at what you submitted. Now, again, if you were a small loan at the time under $50,000, you may have actually done the easy form at that time and not even submitted any payroll reports. And so now you can go back and hand pick those dollars that were eligible. So it's going to depend on your particular circumstance. But yes, you are eligible. You just can't use the same payroll dollars for ERC that you use for PPP loan forgiveness.
Great. Seems like we have a lot of questions about PPP forgiveness for both 1 and 2. So I'm wondering if you could just restate, if someone hasn't already applied for forgiveness for PPP1, should they now be doing that? I think a lot of customers were waiting for clarification on how the taxes were impacted. Any guidance for our customers there?
Yes. So let me go back and remember in the what to do was first start and calculate your sick and family leave credits. Go back and look at attendance records because you're going to want to first make sure you've applied for those. The second thing is go back and then look at your employer retention credit. Calculate any employer retention credit that you're eligible for. Identify those dollars. Now think of it as sort of erasing that payroll. Mark that payroll as already done, stamped and done. Payroll other than that occurred in that 24 weeks after that loan, line that up and say that is eligible for PPP loan forgiveness. And that is the money that I'm going to turn in for my PPP1 loan and my PPP2 loan. Again, most people are obviously going to be looking only at PPP1 right now. And so you would look at rent, utilities, and mortgage interest that you paid during that time period, and the payroll that wasn't used already for those other, the sick and family leave credit and the employee retention credit. Put that in the other bucket called eligible for PPP loan forgiveness. And again, because it's a fairly simple form for loans under 150,000, you're basically you have to keep those records. You don't have to turn any of those in. You're just basically certifying on the loan forgiveness form that I have those records and I did qualify.
And then could you also could you also go over what the deadline for PPP2 is?
So for PPP2 to apply, it is either March 31st or when the money runs out, whichever is earlier. And as I pointed out, we were down to about 100 billion, and that was on the 21st of February. So they haven't published just recently what's left, but it's, again, TikTok, I would say the clock is really ticking, but the drop dead date is March 31st if there's still money left.
Okay. And is there a final deadline for PPP forgiveness?
You have 10 months after the 24-week period or 8-week period. I mean, going back, remember that in the first loans, if you got your loan before June 5th, you could elect to only have an 8-week payroll period. Most people that I've talked to ignore that because you have the option. If you were that earlier loan before June 5th, you had the option of 8 or 24. Anything after that was 24. So why not take the 24 weeks to spread it out and have plenty of time? But you have 10 months after the end of that 24-week period to apply for loan forgiveness. So make sure you mark your calendar for that, because if you miss that window, you're going to pay the PPP loan back.
Okay. We have a few questions about the HHS grants and the Provider Relief Fund. Are they counted as practice income in the quarter they are received?
Yes, they are.
And it is taxable.
It is taxable.
Okay. Both state and federal.
Correct.
Okay, great. Could you clarify what you said about unemployment payments and PPP?
So if I received unemployment payments, it has nothing, those payments have nothing to do with, am I eligible for a PPP loan? So in other words, just keep those off to the side. The question of whether I had a drop in revenue has nothing to do with whether I received unemployment. So again, unemployment does not affect eligibility.
If I'm a 1099 and was denied PPP Round 1 and had an SBA application loan number, which was unfunded, can they apply now since sole proprietorship is more easily funded for Round 1 or Round 2?
Yeah, I would say yes, because I don't know any reason why they should have been denied in Round 1. That was a bank technical error. So I would certainly think they're eligible now and should give it a try.
If an employer received Round 1 PPP, does it matter which year of payroll, 2019 or 2020, to use for PPP Round 2?
No, you were allowed, when you're applying for PPP2, you were allowed to use the greater of 2019 or 2020 payroll, whichever was better for you. Again, with the shutdown period, most people were higher in 19, but if you hired an associate or you expanded and you had more payroll in 2020, you can use the 2020 payroll for the calculation.
If I did not apply for the EIDL loan, can I still get it?
The EIDL loan program, so the EIDL advance, again, that advance money is only open. My understanding is that the EIDL loan program, where they were automatically giving out $150,000, that program has ended, but there is still a disaster loan that you could apply for through the SBA. But the EZ form, where there was really no loan guarantees, no. A lot of they waived all the paperwork and almost all the fees under the original program up to 150,000. That program, I believe, is ended.
I received my PPP2 loan. Should I not pay all of my payroll from that until it's gone? What percentage should I use for payroll?
Well, pay your payroll as you need to do it, because remember, you don't really earmark it. You can take your PPP loans and put it in a separate bank account and never use those actual dollars for anything, because you just have to prove you spent some money, not those dollars. So run your payroll the way you normally would, pay all the pay, do everything you would do, wait till the end of your 24-week period for PPP2, and then look back. If you are down 20% in any one of the quarters, Q1 or Q2, make sure that, again, you handpick the dollars that you're using. Take the employer retention credit first, and then PPP loan forgiveness. But if you weren't down, just from the day you started your PPP loan and it was funded, use all the payroll after that until the money's gone and say, that's what I qualified for forgiveness.
Okay, great. One more question here. If the HHS grant is considered income and taxable, does it also count as revenue and affect qualification for ERC?
Yes, it affects revenue for ERC, because any state grants, any federal grants, any assistance that you got, any rebates, any kind of anything was considered total gross income for purposes of the ERC.
If I received unemployment, can I still include myself for employer retention credit?
The only way you could include yourself is if you were an S corporation or an LLC taxed as an S corporation, or a C corp where you're actually getting a W-2 from the company.
Okay. And I'm going to give you one more question before we wrap up here, Bob.
Okay.
If I receive my PPP loan, does it prevent me from selling my practice? Can I sell my practice immediately after spending all the PPP money, but prior to receiving forgiveness?
Yes, as long as you spent the money the way you were intended to spend it, and you can document that the money was gone for up to 40%, and again, overhead type expenses, and 60% in payroll, and you sold your practice the next day, you are eligible for forgiveness and can sell your practice and apply later to have the loan forgiven.
Okay, great. Thank you. So we still have quite a few questions that came in that are unanswered. So I just want to restate our plan to address those questions. We are going to take them, review them, and consolidate them, since a lot of them are duplicative, and we want to make sure we get this information out to you. So we will take the questions, consolidate them, and we will send them out to all the registered webinar attendees this evening. And you will also get a link to the recording so that you can go through this again. That will be sent out next week as well. On that note, I would like to thank Bob for his excellent presentation tonight, your valuable insights on these important topics. As you can see, there's a lot of information here and a lot of different questions, and a lot of people with a lot of specific needs that we're helping to serve here. So thank you so much. Thank you for joining us, everyone, and I hope you have a great evening.
Thanks to all.
Any additional questions you can send to webinars@henryschein.com. Thank you.
Thanks.